Meanwhile, the SEC is warming up to a Bitcoin ETF, and the battle is well underway to see who will become the first money manager to get theirs out the door. Bob Bassani is here with the latest. Bob?
You know, Kelly, here's the problem. Everybody thought that Gary Gensler was going to be the golden boy for Bitcoin and Bitcoin ETFs. I mean, he taught crypto at MIT. Therefore, he gets it, right? Therefore, he's going to approve a Bitcoin. Turns out, no. What Gensler has done is very clever and very intelligent. First, he has said, I am in favor of financial innovation, and he's been very bullish on that. However, he's pointed out, I am now head of the SEC, which is in charge of protecting consumers. It was founded to do that, protect them from fraud and misrepresentation. And the crypto exchanges, there's been a lot of problems with that. So Gensler has come out very cleverly and said, yes, financial innovation. However, I have no control over the regulatory structure of these crypto exchanges. I need that. And he's basically gone to Congress and said, will you clarify this for me? Will you help me out, either with legislation or clarification or an understanding? Now, he's also gone a little further. He said, and implied that he would look favorably upon a Bitcoin futures ETF. What's the difference? A Bitcoin futures ETF is not based on Bitcoin, it's based on Bitcoin futures. Yes, there is a relationship, but Bitcoin futures are a regulated market. Bitcoin and the way they would set it up in an ETF would imply that he would have to approve something that is actually traded in unregulated markets, and that's the distinction. So now everybody has said, oh my gosh, we're not going to apply for a Bitcoin ETF. We should be applying for a Bitcoin futures ETF. And they're all scrambling to do that. The problem, Kelly, is very simple. The Bitcoin community and the ETF community believe that futures are sort of an inferior product compared to owning the actual product itself. And it is because of the costs involved.
And it's also not pure accumulation of Bitcoin, which you could argue an ETF isn't either, Bob.
Right.
But then others say it's a more efficient way to do so because there's a lot of fees associated with trying to accumulate Bitcoin.
Yeah. Look, the whole idea makes a lot of sense. I mean, think of the gold model. Gold, you had to own physical gold, store it in your house. There were storage problems. It was a problem. Gold ETF actually figured out the problem. There were vaults in London where they hold gold for you. They charge you a fee, 30, 40 basis points, 50 basis points for holding the gold in London. And you have a GLD, a gold ETF, something like that. And that solved a lot of the problem. This Bitcoin would be a similar structure. Who wants to own Bitcoin in an exchange where you can get stolen, for example, or something can happen or you forget the password? You've got the thing right there. But you do have significant roll costs associated with those futures contracts, and that's why the community doesn't like it. They saw what happened with the oil futures contracts last year, Kelly, and that had left a very bad taste in people's mouth.
It's a very interesting choice by the SEC here. Bob, we appreciate all your reporting on it. Thanks.
Okay.